Welcome to Unit 5. So far, we have been talking about the principles and general administration of taxation in Ghana and have been considering income from employment and business. These are two major sources of tax revenue collected by the authority. However, there are other forms. These are capital gains tax and gift tax. In this session, we'll be looking at the meaning of capital gains tax and chargeable income under capital gains. By the end of the session, you should be able to explain capital gains, define capital gains tax, and state at least 4 assets chargeable to capital gains tax. Let us try to define capital gains and then capital gains tax. Capital gains means profit derived from the sale of chargeable assets. It's simply the profit derived from the disposal or sale of chargeable assets. So assuming I have chargeable assets at the cost of 20,000 and I sold it for 30,000, the capital gain becomes the difference between 30,000 and 20,000, which will give me 10,000. So that 10,000 becomes my gain on the disposal of the chargeable asset. Now, what is capital gains tax? It is the taxation of the increase in the capital value of an asset between the date of acquisition of the asset and the date of its disposal. So, using the same example, we made a gain of 10,000. So for this 10,000, we are supposed to pay tax on this 10,000. So assuming we have the rate to be 15%, we are going to charge 15% on this 10,000, and this is going to give us 1,500. So from this gain of 10,000, we are supposed to pay a tax of 1,500. Now let us look at the chargeable assets under capital gains tax. Before that, in accordance with Section 133 of Act 896, a chargeable asset includes an asset to the extent to which it is employed in a business or investment, but excludes trading stock or a depreciable asset So we have land, shares, building of a permanent or temporary nature, business assets including goodwill, and having a right or interest in any of the above. Let us note that the assets listed as chargeable assets are in the case of a resident person, and wherever is situated, it is chargeable in Ghana. However, in the case of non-resident, the underlisted chargeable asset must be situated only in Ghana for it to be taxable. This brings us to the end of today's session. In today's session, we looked at what capital gain is. We said capital gain is the profit derived from the sale or disposal of a chargeable asset. We also looked at what capital gain tax is. We said it is the taxation of the profit from the sale of chargeable assets. We also looked at certain chargeable assets under capital gain. We said these includes land, shares, building of permanent or temporary nature, business assets including goodwill, etc. Hope you enjoyed this session. Thank you.